All right, we have an hour now, and our job is to cover about 4 themes, if we get to them, under the single question: global accounting standards, are they fit for purpose? You know, the kind of world that we're living in, which is very fast, it's very connected, and you know, we live, work, and raise capital in it. So I will be taking questions from the audience on the way through, rather than just leaving them till the end. So some of you know and have burning questions. We'll get to those. But to help us through this, our respected brains trust of the people who are on the panel tonight, and in alphabetical order, because there'd be too many fights otherwise: Tanya Branwhite, who's the Executive Director, Strategy Research at Macquarie Securities Group. Please put your hands together and welcome Tanya as she comes on up. You can take the end seat. I always remember, Tyrone's here in the audience tonight in my old accounting days, debits and credits. Just make sure you get them on the right side, that's right. Peter Day, who's the director of Ansell Limited, he did have a past life as a CFO, and he's managed a number of large organisations and is a former standard setter. Now, yes, you can take the middle seat there. Peter, thank you. Ian Mackintosh, the Vice Chairman at International Accounting Standards Boards. Come on up. I'm hoping you're going to keep them all apart and sane. Being you. Alex Malley, the Chief Executive of CPA Australia. Come on up, Alex, and take a seat in front of your banner. Finally, but not last or least, is Lee White, the Chief Executive of the Institute of Chartered Accountants Australia. Come on up. And please just give them a round of applause. Welcome. Don't start arguing right at the beginning. All right. Now, we've a very interesting speech. Thank you, Monsieur Prada, for that brief tour through the history, because in order to know where we're going, we really do need to know where we've been. And we do know that the accounts help you tell a story, and there is this tussle between transparency and the global good, the noble good, if you like, of what we were trying to achieve, and the grit that gets in the financial machine day to day, and how we wrestle with that. And it's been said before, but I do like David Tweedy's description. It helps keep capitalism honest. Yet we somehow have to meet the different interests of all those people: the preparers, the regulators, the auditors, and the users. So a quick response to Michel's speech. Tanya, I just wanted to deal with some of that first, and just to ask a very general question. If we've had a decade in Australia, and we have now IFRS, which is a teenager. I'm wondering what kind of a teenager, actually. Does IFRS make your job as a user easier or harder?
I think IFRS has certainly made things easier in the conceptual basis of, if we look at accounts across different jurisdictions, we've got much greater opportunity for comparability. But perhaps the question is not so much about IFRS, is do accounting standards best serve investors? Mm-hmm. And of course, I've put my head up here in this audience to be sort of the one. I feel we're at the fun park. You know, the seats where you sit and you answer wrongly, you're going to fall in the water. I sort of feel I might be sort of likely to have that happen to me this evening. But I do think the issue of complexity, and it's been a much banded around topic, is complexity of accounts. That is definitely an issue. And perhaps, and we were having a little bit of a chat, in fact, Peter and I were talking about the idea of volume versus complexity, and the idea that is necessarily the complexity about volume, or is there in fact inherent complexity in the actual accounting standards themselves? So I think a global set of standards applied equally across jurisdictions is obviously it's a no-brainer. I mean, there's no question as an investor to be able to have a comparable set across different jurisdictions, so that we can, as capital investors, make decisions around the different companies in different countries. But I think that's perhaps not the question per se. Is in fact the standards serving the various users well? And perhaps that's a topic I'm sure we'll get onto.
Well, it was a good way to open the topic. So, Peter, we'll tap into you now. What's your...
Well, I think one of the things that I reflect on is that for 10 years, maybe 15 years, I haven't had to think about US GAAP. and in a sense, it's becoming more irrelevant. I don't think the ideas that the US standard setters can bring to the table are irrelevant. I think they can be very helpful, but companies that I'm associated with now, if they have international operations, they report under IFRS. We report into the US using IFRS. We have accounting teams that are migrating from Australia to prepare accounts in IFRS in the United States. When I was on the board of Centro, the US operations didn't understand that property should be carried at fair value, but they really wanted them to remain at historic cost, which wasn't particularly good during a GFC. So the US is unfortunately losing its way. And in the world of commerce now, we can, whenever we ask for credit in the US or anywhere else, we use IFRS. We never get asked a question about the IFRS accounts in terms of their probity or their helpfulness. And as I say, I haven't asked a US GAAP question of myself or around a board table for probably 10, 15 years.
Mm. Anyone else want to pick up on that? I know there were some concerns, Lee.
I agree with Peter in part, and obviously he's got his own experiences, but the contribution I think the United States has made to standard setting internationally has been pretty good. Whilst we're at different points, I think their thinking and their approach has been very strong for quite a long time. But, you know, if I was to pick up a little bit on some of Michel's comments, you know, it's great to hear the progress that has been made. But, you know, if we talk about a few elephants in the room, which I sort of like to do, we're still not really there with the United States. And, you know, I was a little intrigued, as I like to read lots of detail into announcements and what gets said, that the G20 finance and Reserve Bank governors who recently met in Sydney, their most recent announcement seems to have pulled away a little bit from a single set of high quality accounting standards. So without taking over the role of the moderator, I might reach to Ian here on my right.
I was about to go to Ian, so you're not going to do that job.
So
I'll do
Ian,
that for you. So
Okay,
Ian,
thanks,
what did you make of that piece?
that's my question.
Well, Lee made a couple of good points. I mean, the contribution by the US board over the decades has been substantial, and it's continuing to be substantial, and we haven't finished working with them yet. I mean, we're finishing leasing, we're going to work together on revenue recognition.
I bet you are, yes. Come on.
Got a cynic on my... But we're moving from a bilateral sort of a relationship to a multilateral relationship, and FASB are going to be very much part, well, they are already very much part of that multilateral relationship. I mean, if the US does adopt at some stage...
It has.
It has,
Of course it has.
Michel made the point in his speech, you know, on the use of IFRS, but there's a lot of American companies still use US GAAP, I'm afraid, Peter, even if you don't have... You know, he abandoned me once to go and work in the US, and I had to handle all the problems here, do you remember?
Oh, that's very sad for you, Ian, but we'll move on. We'll go to Alex.
Just
like
a couple of things. I
yes.
tend to agree with Tanya. This whole issue of complexity is something that we need to accept as a profession that we've contributed to.
Yeah.
And I don't think the profession, as much as we've done very well to rally and bring us to a point where we can say we've internationalised the profession and done a very good job at bringing together the IFRS in spite of perhaps issues in America, Japan and China, that we haven't quite got the adoption, meaning consistently applied model either. But to anyone outside of the model, and you made a comment in jest this afternoon or this evening about jargon. The fact is, one of the issues with the profession is they only talk to themselves. Yeah. And we have to be better at clarity with our messaging. We have to deal with complexity as much for ourselves within the organisation and get a consistency between the way in which we run the organisation and report the organisation. and not have this process out there that's about telling everyone what we do, that's quite different to the way we work. And I think that is a very important part of what is our challenge into the next 10 years.
But I think we not only need that clarity, but we need some real advocacy.
Absolutely.
And what I don't see in the community are sufficiently high-profile people speaking out for accounting standards. And I'll give you an example. We need a Janet Yellen. We need a Larry Fink. We need a Mark Corvey, Bank of England. Sure. We need credible people who actually stand up and advocate the contribution of accounting standards when we get the stupidity that comes out of the GFC, that accounting standards cause this and cause that. So we not only need reduction of complexity, we need people who can articulate it and advocate it in a strong way.
But we've got to accept that while we're respected as a profession, and many would claim we're the second oldest in the world, the fact is, as soon as someone says in the general community accounting, people pause and think this is going to be complicated. Yeah. And I think we have to accept that responsibility to clarify our messages and to actually tell a story that actually the electorate understands, so they will come with us, as opposed to when there is a GFC and there's a dip in the market, all of a sudden let's go and blame accountants. Well, it's because we have isolated ourselves and we need to be better communicators.
But this is a very different conversation from the conversation that we have in boardrooms, in the various areas that we all occupy in this terrain. So what you're talking to there is a kind of general level of increased literacy. Now is Hans here?
Hans is here.
Just there.
Thank you. I just wonder if we could touch on this, because I did read something in the paper today that seemed to me to suggest that you were saying that that the analysts could do the job, that we didn't really need to be able to understand as individuals the details of the accounts. Can you clarify
what I
perhaps?
tried to make clear in the interview.
Would you mind standing up?
Yeah,
if that's
sure.
Right, thanks.
What I tried to make what I tried to make clear in the interview is that accounting is often very complicated because business has become very complicated. As soon as you use derivatives, accounting becomes very complicated. And what I said, that investors don't necessarily need to understand all the specifics of an annual statement, and they can rely on analysis of analysts. That does not mean that we should not try to make accounting as simple as possible. But as simple as possible will still be rather complicated, I'm afraid.
Well, and I think added to that, Narelle,
Thanks, Hans.
our users often assist the complexity because they want more and more and more information. Every time we discuss disclosures when we're doing a standard, usually comes towards the end, you know. And you say, well, do you really need this? Oh, yes. Would you use it often? Well, maybe not often, but when we do, it's really important. You know, we need to... And
But people will always ask for a little bit more, won't they? That's human
Well,
nature
let's-
in a way.
Why is it
But let's, Tanya, I mean, you've
It's
got
always good
you
when
know,
people say what users want, right?
obviously you've got a very strong interest in this. I'd like to hear from you.
I think this goes to the tussle. I mean, essentially what is, and it really does, there is often a tension between the companies and the management, and this of course is the ongoing relationship between those who provide capital and those who take the capital and go and do something with it. And there is constantly this tension that, the users are sort of this evil group who really want all this information and are really going to expose us. And in fact, I think it should be far more appreciated that most of the users have a stake in the company's performance and its financial success. And in many cases, I mean, I would actually sort of challenge a little bit Ian's comment.
Go ahead. We'd like to disagree.
In terms of information, sure. I mean, you offer a child a candy store, they'll always go, well, I'll have all of that, all of that, all of that. But of course, at the end of the day, if you really say, you can only really choose 5 or 6 things, you then actually force people to say what really is important. And I think users will absolutely say what is important to them. And I think it is also important to distinguish this issue of complexity, because I agree with Hans. And it's something actually that we touched on in the FRC report on complexity. And that was, it is a complex world. Companies have become very complex entities. They operate in a range of different jurisdictions. And effectively, the sophistication of capital markets has allowed companies to try and manage risks, to actually take on different activities, and that has created complexity within the organisation. Hence, of course, the accounts of that organisation are going to become more complex. But there is a difference between complexity and volume. And I think that's a very important issue to break apart.
Okay.
Yes, we can have volume, and if the analysts are asking for some volume of information, that's one thing. But I'd actually distinguish between volume on the one hand and complexity of the information provided on the other. And I can say that, in my view, that they are two quite different things.
The professional judgment around determining what is material, I think has slipped. And when in doubt, prepare a 160-page financial report. Prepare a 600-page annual report, because everything's in there and we can't be blamed. I think we need to be more comfortable in our judgment to say we've done a good analysis of the stakeholders of this entity, and fundamentally we say from our judgment these are the key material issues, and we're going to back them. And I think that's where we've slipped, this whole materiality question.
We're trying to address that, Peter. Alex, with our disclosure initiative. And we're trying to get the various stakeholders together, the preparers, the regulators, the auditors in particular, to start talking sensibly about this ticker box mentality and what's really needed. And, you know, isn't there a way we could become more rational if we all work together? But a lot of them, for instance, are very fearful of the regulators. If they don't put something in, they get a letter back saying, well, how come you didn't have a note on this or that?
Yeah. I know in Australia the regulator has been very mindful of saying to people that materiality is important, and therefore we shouldn't be excessive. But I think also we talk about excessive reporting, but even in developing standards, the IASB has tripped itself up. You look at the leasing standard. We all know they should go on the balance sheet, but then we've tripped ourselves up in terms of the P&L disclosures.
Yeah.
And really, that kind of complexity just shouldn't get in the way of what is a good idea about dealing with that issue.
So how would you resolve that, Tanya? Do you,
Well,
if we're trying to find the way through here, have you got thoughts? Or
It's all right. Warren's going to have a laugh here, because I think we've been on the leasing journey, sort of me as a user and certainly you initially on the IASB. But I absolutely agree with Peter. I mean, you know, the idea of bringing leases onto the balance sheet is really what users were all about. It was, okay, let's at least get the information onto the balance sheet so we can really understand if we really need to normalise the balance sheet and acknowledge this is some form of debt or some sort of obligation of the organisation, let's get it on the balance sheet. But then I have to agree, we've sort of now got the potential of a standard that is going to create a huge degree of complexity in the profit and loss treatment of leasing. And ultimately, I can tell you here from an Australian perspective, most users will throw the P&L treatment out and just go straight to the cash flow. And say, if that's the actual charge for the lease, that's what essentially I want to know. That's what it was really about. But to start talking about some sort of, you know, a treatment onto the P&L that's become as complex as is being proposed, absolutely sort of trips you up.
I don't think our current proposal is complex. Our current proposal is just to treat them all the same and treat them like a finance lease.
And then you have to sort of assume what sort of interest rate we're going to apply. We're going to basically apply it over.
You have to do that now with the finance lease anyway.
So why not just use the charge for the leasing as a representation of that charge?
But that's, I think what we're debating there is the simplicity versus the complexity. And in terms of financial reporting, I think the IASB has recently published a whole article on this complexity issue, and they list about 5 or 6, maybe 10 don'ts. And we've just got to have some courage to not respond to the minutiae in terms of financial reporting. But around, speaking for myself, around some of the boardroom tables, there's typically only one person that is advocating accounting standards. And on the boards I'm on, I'm the bunny. and there is typically a chair of an audit committee who has to defend the complexity of the accounting standards. So we need to develop strong advocacy in the director community that says these are actually a good thing and they actually do a good job, and get over it, because the other people around the table will not have a better solution than the one that the IASB has come up with, even though it is complex. We need to have more advocates in the community saying these are good, they're not just to be thrown rocks at.
I'll take a response from Lee, and then I'd like to go with Stephanie Kemp in the audience tonight.
She's down the back.
great. Stephanie, you had a question on this area, so I'd like to go to you and just touch on that. Thanks. Okay.
Narelle, I'd like to just come back to something Michel made his remarks, which was about 2/3 of the way through his presentation, in talking about the next challenge around reaching out via the securities regulators around implementation. Because in one sense that sounds pretty good to me, but another part of me also says, having experienced different cultures of regulators, that there can be a great push to put more into the standards to the minutiae to assist in implementation or other aspects of that. So, you know, again, I look to Ian here on my right to say, you know, that's great around engagement with that community, but we need to be careful that we don't get caught in a cycle of what we think is improving, but actually adding to challenges.
And you raise a good point. And we're trying to work with regulators, mainly through IOSCO at this stage, to find out what the problems in the implementation are. Then there's the decision of what you do about the problems. Yeah. And that's where,
I get that.
Your
I get that.
problem comes. So we've tried to make IFRIC, our interpretations committee, sorry for the...
It's another jargon alert. Jargon alert.
It's a dollar in the jar, eh?
So we've tried to make them
$1,000
more user-friendly, and this was part of our general $1,000.
It's gone up.
This was part of our general strategy. Now, that's a two-edged sword as well, because if you get lots of interpretations, then you're making the whole system more complex. So you need to push back when you hear problems and say, are they really problems at all? Or are they something, if you went away and thought about it properly, you could solve for yourself? So there's that balance. And around the world, it'll be different in every country. You know, the attitude will be slightly different.
That only compounds the challenge.
That's right.
So, I mean, just as an example, I mean, in preparation for tonight, and we thought there may be a bit of a discussion around the conceptual framework. I mean, you actually download the conceptual framework discussion paper, and 243 pages later, of which you're going into the absolute minutiae of all of the various components. That's the conceptual framework, let alone the implementation of that concept. So, I mean, it just does go, it's not particularly helpful if you are coming from a non-accounting background. And I think that's the thing that perhaps Alex is sort of alluding to, is that many of the users, those who are actually going to rely upon this to make decisions, whether it be capital, whether, you know, equity, debt, whatever sort of decision they're making, they are not going to be of the user, they are not going to be of the preparer or the accounting community. They are going to be a sort of walk down the street type user.
But we have had a lot of criticism that our conceptual framework's not aspirational enough and hasn't gone deep enough, and we didn't have enough pages in that document. So
Ian, you're saying it'll be 500 pages.
Did they really say that last bit?
Yes, that's true.
Narelle, just on this, it goes in many ways to sophisticated economies tend to naturally complicate themselves by virtue of their age and by virtue of the various stakeholders that build an interest in their economy. And I think what we've got to pause and step away from and look at here is that the reason why the profession's been so successful in many ways is been its technical strength, its substantive ability to report and to measure and to assess and to judge. But the world's changing and the world's expectations are changing, and I think we've got to perhaps step away and say this incremental growth of our standards, this incremental direction that we take is understandable given our history, but perhaps we've got to pause for longer and say, what is it we're actually wanting to achieve with this? And if need be, what's a simple sketch of what would be nirvana in this particular area of reporting? And let's worry about then trying to codify that after. Now, that may well happen, but I think there's got to be a process where enough stakeholders have seen a vision of what it could be as a broader picture, and then we try to bring it back. I think we've got to change our approach a little bit.
It's that notion of the human-centred design, that very kind of
that's
classic,
where the world's
simple
going,
approach.
and we just need to, look to adapt as well.
So you would think the conceptual framework would help with that.
That should be the vision.
But how did we get to 243 pages?
Well, there was a lot of explanation. There was a lot of...
There was quite a few footnotes.
No, I'm just wondering, if you had to do what we're all being taught as a discipline now, to draw it on a page, what does it look like? And to just for argument's sake go with that as a
There is a good diagram. There is a good diagram. That was one page. There is a good diagram.
You are right.
You
It's the
memorised it,
framework.
didn't you?
Okay. Now, Stephanie, did you... I had a couple of questions from you, but relative to where we're at the moment, would you like to just identify yourself and keep your question fairly tight? Thanks.
My perspective is as someone who works in litigation support, and as we sometimes act for plaintiffs in shareholder class actions and so on, we're very aware that it's quite a sort of dangerous world out there for auditors and preparers of accounts. So my question was, how do you make an environment where professionals feel safe to make somewhat adventurous judgments in terms of something not being material and get to that point where the accounts can be a better communication tool?
Thank you. Who'd like to...
Can I just say with... Oh, sorry, Lee, did you want to go?
You two can throw a coin, but we'll go to Alex first and then we'll come to Lee, I think.
Because we haven't quite made the high chairs yet, so we haven't achieved that.
We're on our way.
Yeah,
We only put very confident people in those chairs.
Put the hosts in the low chairs. It's a good option. But in terms of a comment Ian made a little earlier around, you know, building those relationships with investors and other groups, regulators and so on, is that to give you a safe environment, I think you need to have a good dialogue between the various stakeholders, the regulator, the government, and agree on some broader principles and be able to fall back on those in the state of a certain circumstance. But when you look at what's been happening with crises and, you know, the natural human movement, the politician wins an election on a promise to resolve the impossible. So haul in the regulator and tell them they're going to have to fix it because I've made a political statement and my political future rests on your regulatory capabilities to mitigate all risk. And so the regulator's placed in this position where they've got to say they're mitigating all risk when they don't want to say that or give the impression. And so what we've got to do is have more open conversations. And look, every conclusion to every comment I make tonight will come back to the same principle, that if we publicly have a better conversation that more people understand around the issues that go with regulation, with reporting, with the litigation aspects, the safer we are. But the more we speak in our own language and get off on sitting in a room and talking to each other all the time, the more we will be isolated from the support we need when things are tough. So I think it's that communication thing that Ian referred to, and it's about us stepping up and opening a conversation and storytelling about what the real issues are.
And it's what you also talk about the important role of getting outside voices into a conversation. That it's the hard thing to do as well, Lee.
Narelle, Steph, I would say it's a little bit back to the question I posed to Ian, that if there is this reach out, which I can understand via IOSCO and to the securities regulators, I think that's the key part of the conversation in saying we're here to understand and to work with you, but also our goal is to ensure that we don't get into a cycle where people are fearful and therefore defaulting always to greater disclosures or whatever it might be.
Well, two comments on that. We're working with three groups, basically, with the preparers, the auditors and the regulators, and ourselves, that's four.
Good.
And we're trying to get some form of consensus. But again, once you go international on this, it's even harder.
It's a matrix,
and if we get the US adopting, it'll be even harder again. I was at the Integrated Reporting Council last week in New York, and a lot of the discussion during the day was how to get the US on side with integrated reporting. And one of the biggest problems the US has in coming to grips with it is litigation. They said, we disclose all this stuff and set it out, we're open to all sorts of suits. And so it's a real ongoing, and that's why we have some difference in standards. And you know,
we've already heard from Peter that you know the game's over there. That you know there's a stampede elsewhere. What are the experiences that you're seeing in other parts, in Japan that Michel alluded to China, to the Middle East, and so
in relation to
I guess just more. I just want to lift the conversation up a little bit back to kind of more
to how they're joining the club. And
yes,
what's going on? Somebody earlier just put together US, Japan and China, and I've been worrying about that for a while because I think China are much further down the road than either the US or Japan. And the US have got adoption for foreign companies that come in and list, but otherwise there's none. Japan are taking a number of steps, and Michel made the point as to the number of companies that are now using IFRS, and it's growing, and it's up to 15%, I think, of the market share at the moment, looking to go to sort of 30%, and there's a number of initiatives there. Our Japanese trustees today made the point that, they build by consensus in Japan, and on the number of moves they're making, they're starting to build this consensus. The most interesting one is India, where we haven't really made much progress for quite a while, but they all of a sudden last October passed a law that allowed, in a funny Indian way, IFRS to become adopted. And now there's been various announcements that they're going down that path. Well, at the moment they're having an election with 843 million voters in India.
Yes.
But we'll be back talking to them
after
the election.
they've done a much bigger electoral cycle in a much larger
it's
country.
The middle of
space
May
of time.
they get a government.
That's right. Alex, you were having a quiet chat there.
Just about, because you raised just a moment ago integrated reporting, Ian mentioned at the council, which I'm on as well. It's interesting, because this whole debate and discussion going on about integrated reporting, in many ways, one could argue quite comfortably, is an attempt to have a re-look at the whole process under another banner somewhere on the side and build a whole lot of stakeholders to the debate and try and raise the bar on what reporting might be out here while we've got something over here. And I think we need to be thoughtful about how that's happened. And the thing about integrated reporting that I think is quite compelling, and there are a few things about it, is how it embodies the culture of making sure you understand who your stakeholders are, making sure you understand that it's not materiality for you as a reporter, it's the materiality for the stakeholders who you're serving. And that reframes the whole way in which you think about your business, the way you communicate. I've chaired two audit and risk committees for two government covert agencies. If you ever want to learn how to deal in a difficult situation, is an audit and risk in a secret body. That's hilarious. It's even more complicated than ASIC occasionally. And it all comes down to the conversations you are able to have in the business about the material issues that affect stakeholders. And integrated reporting does create that conversation. And we've got to start that discussion.
Okay, so you've had the experience of actually putting together your report for CPA Australia. What have you learned? What's been the experience, obstacles?
Look, in some ways it's been quite revolutionary, because we had to talk to the board about the certain things that we would have to report as a result of going into this paradigm, and they're quite impactful for a board, and they're quite impactful for a management. And so for us it was about starting with this whole concept of saying, well, we need to rebuild the culture in reporting. And it's an inclusive reporting approach. So for people all around the enterprise, all contribute to the report because of the breadth and nature of it. So all of a sudden reporting is no longer this thing that happens over there with just the finance area. Everyone makes a contribution to the reporting, and therefore everyone's responsible. And that's been a huge difference. It's brought a tighter culture. And it's allowed for us to have a better conversation with the board about a broader range of metrics that challenge us in relation to even how much we're willing to tell the outside world about some of our commercial issues. But it creates a really healthy internal conversation.
Some level of celebration going on.
Temporarily disturbed by the fireworks, which is great celebration about the fact that
we did organise to put this on.
Celebrating.
I hope the trustees, Michelle, yes, thank you.
Yes, thank you to Lee and Alex for sponsoring the fireworks tonight. Lee, you had some issues that, there's definitely for and against camps. There's the challenges it provides. We were having a bit of a chat about it. Some of the concerns about integrated reporting? I think we've got distracted with the fireworks. We've been good champions around that form of reporting, but I think there is also levels of angst that, and I think Alex was alluding to this, that it is not just going to be another mechanism to layer more material on top of each other. So I think globally there is great expectations to navigate through carefully
how frameworks of financial reporting, whichever ones they might be, but we would prefer them to be IFRS, and the broader integrated reporting gel together. So it can't be a layered approach, because we have seen that in good attempts, and it just adds more to what we've already spoken about.
Now, as I say those two words together, I'm looking at Peter Day, and I know you have some concerns as a director.
Well, if I draw a triangle and I sort of think about the 20F that we have to lodge with one of the companies, and I think about the integrated report that we're being led down to embrace. But I find the recent initiative to improve the OFR has actually, not on the particular board I'm alluding to tonight, but on one particular board, directors turned around and said, so that's what we do. And in fact, the developments on the OFR have been far more profound, I think, than I think. Certainly, I'd cast aside the 20F because it's just a risk document. The integrated reporting, I'm sceptical about it, but I'm willing to be converted. But I think Australia should get its house in order in terms of getting the OFRs up to speed. And frankly, if you're going to have forecast information, you have got to create a better safe harbour rule. And if we're really wanting to talk to investors about the company, put the CEO's results presentation on the first 10 pages of the annual report, because that document is the document that so many analysts turn to get a story about the business model, what's happened, and what are the key metrics that from which obviously they're derived from the IFRS information. But you know, if we want to change the reporting, we've actually got to look at what people really look at, as opposed to what we produce in the 200, 600 pages.
So, Tanya.
Yeah, no, I absolutely agree with Peter. I mean, I think, in fact, I'd made some notes sort of when we were thinking about integrated reporting, that the ASIC initiative of the OFR in many ways is sort of a little bit of a de facto approach to an integrated report. And I think what's really interesting is that, you know, we talk about what investors or what stakeholders are trying to get from the financial reports. I mean, a really good, OFR provides the context around that financial performance and provides a much better insight into the decision making from the organisation, and therefore puts in context some of those financial results. So I actually sort of very much agree with Peter. I think Australia's already started to go down what is essentially an integrated report approach, but it's under the OFR. And I think it would very much help with the complexity around financial accounts, because it'll put a lot of that in context.
And some on the Integrated Reporting Council view it as a sort of an elaborate OFR. I mean, you can take that point of view. And I've got some sympathy. It was the first job I did as UK Accounting Standards Chairman, was an OFR standard. And of course, IFRS have a management commentary, a non-mandatory standard on management commentary. So they all feed of it. And I think if you keep it in that context, you can start to get some value out of it.
I think you need to stay out of the arena of what I'd call performance reporting. And we've had, at the IASB level, we've had some bad experiences with trying to get a one-size-fits-all. And I'd allow private initiatives like the integrated reporting model or the regulator-encouraged model like the OFR to get some air. Because I think the IASB's got enough to do. You've got to fix leasing, revenue recognition, extractive industries. I want that fixed. So, you know, I got a few things.
Are you going to continue with this list? Or
yes.
Are we...
And on top of that, he wants a period of calm.
It's a bit of work.
We all want a period of calm.
And don't finish the conceptual framework, because it's never finished. Just keep pushing it out there. Keep the mob away. Don't let them get onto measurement, because they'll all get upset.
This is what happens when you put someone on an apes board too long.
All right. Now, look, I know there was there was a bit of discussion here. So I've got Nick Wright-Hodge in the room. If you had I think you might have had a question, or possibly Greg or someone else had we've got the microphone coming around. So.
Right, it may have been answered. So it's Nick Wright-Hodge. I'm at KPMG, but also on the IRC's working group developing the framework. But my question was really around some of the conversations we had here about the integrated reporting in Australia and what needs to be done to take it to the next stage. I know Alex and many others are starting to work through and have worked through to develop an integrated report. There is a difference between the OFR and the integrated report in the framework design and what's actually incorporated in that around the focus on value creation, broader value than just financial value. There are risks, non-financial risks that are associated with creating value that are brought out in the OFR, but there's a broader focus on value over short, medium and long term in the integrated report. So my question really was, what else do we need to do here in Australia to actually get a broader take-up of integrated reporting, maybe to take the OFR to the next stage of focusing on longer term value creation and the alignment of strategy, business model, risk, performance and prospects, not forecasts, but prospects.
Just keep it tight, thanks.
Wouldn't the first thing you need to do is decide whether you wish to do that or not? I mean, because that's the first question. Do you want to go that much further, or do you want to keep it contained? And they're really, I don't know if you agree, Alex, but there are kind of two camps in the Integrated Reporting Council, you know. And one camp led by the chairman, Mervyn King, is to save the world. I mean, he talks in each speech about his children and his children's children. And he's talking about sustainability and climate change and all those sorts of things. There's another camp that's far more practical and really talks about what you're talking about, a better form of reporting and something that helps the investors more. But you have to work out which one of those camps you're in and where you want Australia to head in that regard before you start working out how you're going to do it, I think.
Dive in.
Nick, one of the responses I got was Michel's comments made reference particularly around the economic benefit around growth coming from the use of the accounting stance. So I think in order to advance the cause, the basic benefit needs to be articulated quite succinctly so that people go, right, so this isn't just about casting it in a different way or showing something that's not necessarily seen, or to those that are already converted, if I might use that phrase, already get it. It's to the mass that don't. So have a great argument and one that actually succinctly says what the benefit is.
Now,
Nick, sorry, I was just going to say, Nick, one of the other aspects, of course, as you know, with integrated reporting is it's very clear recognition of the fact that the vast majority of assets under the control of entities these days are intangible, not tangible, and that the premise with which standards are still prepared on the basis of traditional resource management of tangible assets. I think the public conversation about saying that the value of entities now is reshaped into a very different set of resources to what we knew 20, 30 years ago, and integrated reporting focuses on that. I think that's something that the world needs to understand, that increasingly the assets of a company aren't in the halcyon days when I went to uni where everything was fixed and that's how you passed your exam. It's all about everything other than that and how you manage it, how you assure it and how you measure it. So that I think is a big issue.
It's a really good point. Look, I'm conscious of time. We're galloping away and we had some questions I think have been tackled on the way through, but if you've got a question, can you put your hand up? Keep it very tight and I'd really value your input to this. There's one here. Thanks.
Regina.
Over there.
Hi, Regina Fickers from PwC and the IASB. Just for Ian, I mean, we've talked a bit about integrated reporting. We've talked about like the size and volume, Tanya, of the financial reports. Just a comment from yourself in terms of this disclosure initiative. Will there be an objective or a framework around disclosures which will help provide parameters for keeping it tight?
Yes, we're hoping so. I mean, this is in a very early stage. And there'll be a discussion paper out this year, but the aim is to get a document that communicates better. And I think you made the point, Tanya, it may not be about volume, or it may be. It's certainly about complexity, but it's trying to work through those issues.
Tanya, did you have any observations on that?
Yeah, no, I mean, I think, you know, the whole point about disclosures is it's meaningful information. And at the end of the day, I mean, we come back to the economic benefit. What the accounts and financial reporting or integrated reporting or OFR is all about providing information. And I think it almost goes back to the question before about the whole litigious sort of circumstances that we often find ourselves. And often there's a reaction that less information means that less information out there means we're less exposed to a litigious sort of circumstance. And yet I almost take the opposite view that often the more information people have, the less chance they have of making a poor decision because they didn't have that information. So it sort of comes back to, I think it's important what information is out there. Sometimes volume is important because of some of the complexity that we have, but ultimately it's that meaningful information that is disclosed. And I think the concern about opening the veil a little bit is perhaps a concern that if we can maybe get some safe harbours for directors, that they would feel a lot more comfortable about having more information in a broader conversation with stakeholders about the company.
We've got time for a couple more questions before we... Jeff Lucy here, and then we'll go there.
Not a hard one, Jeff. Just an easy one.
He won't do a hard one.
He's been saving this up for you.
He has been saving this up.
He won't do a hard one.
And if he doesn't, he'll put the money in the jar.
As Michel noted, we do have the unique situation where we've got trustees from all over the world.
Yes.
And Australia, in a couple of areas, has provided leadership. One area that I'd like to particularly talk about is public sector accounting. And I think that the trustees would appreciate hearing as to where Australia is in relation to public sector accounting. And Lee, you were a government auditor indeed for New South Wales, and I wonder whether or not you could provide an update as to the benefits for public sector accounting in Australia with IFRS. And perhaps Ian could provide a commentary as to where the foundation is in respect to public sector accounting.
All right. We'll keep it
The
fairly
night
tight.
ends at midnight, eh?
Wow.
Yeah. No, we're standing between you and dinner, so we're very aware of that.
Let me just say a couple of very quick things, Jeffrey, and this will sound a tad self-serving, but I think nearly everyone in the room is Australasian or somewhere from this hemisphere. But, you know, this country's done very well in terms of its government accounting, which has been developed up, I think, well in advance where other governments are. We need to maintain a pace around that. I come from the camp that I do understand there is uniqueness with the public sector, particularly in natures of assets and liabilities, but I don't see it as unique as perhaps others do, and so therefore a closer alignment around the IFRS principles, the conceptual framework, I think is a great place to advance it further.
Yeah.
Where we sit, we actually had a discussion in this regard today in relation to the review that's being carried out on IFRS and its governance. And I think fairly full consensus in the trustees' room that while there might be some merit in the longer run in pulling the two together, and some would disagree with that even in the longer run, that in the shorter term, given the mandate we've got, and given the task that we've got, it wouldn't be suitable for us at this stage to be taking on a governance role in relation to IFRS. I think it summarises it, doesn't it, Michel?
Yeah. No, it's giving you the... No.
Would you just wait for the microphone, please, Hans? Thank you.
I'll translate, Hans.
I would love to do the job, setting standards for the public sector, because being a former Minister of Finance, I know they need it. But the big danger would be that it would politicize our work even further than is already the case. And we would like to retain our independence. And if we get thrown into this sea, then we might sink. So important work, but we need to be very mindful of keeping our independence.
Thank you for that.
Yes.
And we'll take the question there, and then I'm afraid, believe it or not, it's galloped. We'll have to wrap up.
Michael Coleman.
Hi, Michael
Thank
Coleman.
you.
I'm a retired chartered accountant, or I'm still a chartered accountant. I'm
You
retired.
are, Michael. We haven't taken any action.
Yeah.
Michael and I had a very, very interesting exchange a good decade ago.
Yep.
When the financial dramas were happening just after.
And I find as a company director now, I suffer much the same problem that Peter Day referred to earlier when he said that he's the only person on the board who typically actually understands what the objectives are. I've been listening to the debate tonight, and I'm not sure that we've actually answered the question you set out to answer, Narelle. Are
Yes.
global
Are they
accounting
fit for
standards
purpose?
fit for purpose?
Yes. So what's your...
I think we're still struggling to identify what the purpose is. And I think the sheer fact that we've touched on things like integrated reporting, which is, to a large extent, is a reaction to a number of users suggesting that there's something that they're not getting out of financial reporting. The sheer fact that we're actually even touching on IFRS and the public sector and how you might actually link the two, and we keep on talking about neutrality of transaction reporting. I think that I would rather have seen the conceptual statement actually go back and say, well, what is it that we really want to get out of financial reporting? And start from that point and then work back.
And you don't think that's achieved through the objectives?
No.
Okay.
I think that part of the reason why so many people say that it's broken is because we don't really quite know what it is that we're trying to report and why. Because there are, going to a question that Tanya and I spoke about earlier, when she was saying, well, I'm not to blame for all this complexity, I'm not that person who's asking for all this information. But we are living in a world of big data. We keep on hearing about big data. And maybe what we need to do is say, well, in the 21st century, maybe we need to sit back and think again about something that, you know, had its origins back in 1398 with Luca Pacioli. Now, maybe it's time for us to sit back and actually think again, what really is the purpose of financial statements? What are we really trying to achieve? And then maybe from there we can actually come up with a better answer without going around in circles all the time.
Thank you. Very, very excellent contribution. Who would like to respond to that?
Well, we do in the conceptual framework. It was hidden within the 243 pages. I don't think it was in the 245 pages because it was in a chapter that we weren't reviewing. But there is an objective.
Clearly, we have some work to be done there.
There is an objective for financial reporting clearly enunciated there. Now you can agree or disagree with it. And it's to provide decision useful information for investors and other providers of capital. Well, I don't think that's too bad.
By all means, have a team in a small dark room working on that. Meantime, get it 80% right, get more of the standards out that need to get out, and move the pace along. Because at the moment, you are slowing down, and there is gridlock, and there are some important standards that need to get out there.
That's a very good point on which to end. Would you please put your hands together? Thanks. Thank you. Mackintosh and Lynn Wood.
Well done, Pete.
Many points that could have